Here's another trade recap on today. I want to show you guys how we caught the absolute top and just kind of how I was expecting the sell to come, right? Just using concepts of liquidity and properly trading levels of supply and demand. So this morning I sent an alert. I said buy opens QQQ 1114, 371 puts. Got them at about $1.86, okay? But I want to show you guys exactly why I was bearish, okay, going into today. So to keep things pretty short and sweet and simple, I said that we were inside daily supply. We also had a rising wedge forming right into the level of supply as well, okay? So here is the projected path, and then you can see the daily supply zone, which resided above prior highs, right? So we have liquidity generated above the zone, which was prior weekly highs, okay? So I was essentially just looking for a rejection up, and let's call it around the 374 area. All right. These puts that I alerted actually went 186, I believe, up to like 330, right? So for a big winner. So I want to go into a chart, kind of show you guys why I was looking for a sell-off to come. All right. So let's delete some stuff here. Okay. And then we will go back to the basics. I'm going to delete some notes here. Okay. And let's get to business. All right. So we have liquidity here, right? We have a prior swing high, right? And if you notice something, look at where that level of liquidity resides. It's residing literally right into a daily supply zone, right? You can see this order block right here, okay? So if we draw it from the wick low, right, up to the wick high, we have our higher time frame POI, okay? Notice that what resides right below that supply zone is liquidity, right? You want to see liquidity resting above or below your zones, all right? We actually sold up into a daily demand zone at a day, all right? But with that being said, this is what is important, guys. You want to see liquidity resting above or below your zones. So for supply zones, you want to see resting liquidity lingering right below your zone, all right? So let's go on to an hourly chart, cash session, and let's see what happened. Check it out, guys. We met supply perfectly, all right, with a huge sell-off right there. We are down 5 points. In the grand scheme of things, this was a very well-needed breather, but I just want to show you guys why it's important to see inducement and liquidity below your zone. So check out the first rejection here, okay? You could see that it came close, right, but it didn't technically speak. It did not tag supply. You actually want to see inducement here, right? You want to see impatient shorts get in early, because what will happen is the market will use them as liquidity, right? So the market's gonna trap impatient shorts, right? It's gonna sell off, then it's gonna start to bounce, then it's gonna stop them up. Then we finally get penetration actually into the higher time frame POI. All those early shorts who got stopped out here, they were right about the move, right? But they got stopped out, right? So they were used as liquidity. And as you can see, guys, we finally penetrated right into the zone. We are down over $5, and our QQQ puts paid up pretty big. I cut mine pretty early because I didn't want to play into Powell, but I just want to show you the power of properly identifying and trading levels of supply and demand. Let's say you have a level of supply here, okay? And on this is a higher time frame PY, and on the smaller time frames, we are approaching your zone, and you are starting to see some rejection or premature reaction from your zone, right? And you're telling yourself, oh my gosh, like I think I want to get in kind of early. Stay patient, guys, because most of the time, you don't want to be the first one to the party, meaning that when you see that first initial rejection or bounce, or you see your zones get prematurely reacted from, that's actually what you want to see. That's inducement, okay? It's basically like a smart money trap, getting retail in early to the trade. So what happens is you get the premature reaction, right? They get people short early, and then you finally get the actual move to tap into the POI. So they generate liquidity, stop out early shorts, and boom, right? So you want to start seeing liquidity like this generated, right? And then finally, upon the actual penetration into the zone, right, they trip all those stops of those early shorts, and then the real move happens. And as you can see, we have perfect inducement right there, right? Strong penetration up into the supply zone, and the sell-off came. Hope this helps, guys, but this is exactly how we use concepts of liquidity to properly identify and trade levels of supply and demand. If you are not using context in your trade, your levels of supply and demand are useless because you are not being able to figure out who is in control and what side of the order flow you want to be on.